Ray Dalio. He is one of the most respected voices in the finance community and considered a thought leader by many when it comes to the economy and investing. He's the founder and co-chief investment officer of Bridgewater, the world's largest hedge fund. That's why it raised a huge red flag for me when I heard what he had to say about upcoming inflation in one of his most recent interviews. In this video, we're going to hear why Ray Dalio thinks massive inflation is ahead for the economy and what he is doing with his own investment portfolio to not only protect against the effects of inflation, but actually benefit from this economic environment. Listen to this clip of Ray Dalio speaking at the Wall Street Journal Future of Everything conference, and then afterwards we can break down his economic predictions and, most importantly, how we can properly position our own portfolios.
The payments on the unemployment benefits have been greater than the benefits in some cases of working. And so that has been a challenge. And I think it's recognized, and then they'll get through it. I think this is a...
So do you think they should be rolled back?
No, I think it should just be completed and moved on. Get past it, and then we'll go back.
So continue with the extra payments for now.
We're not going to sustain the types of payments that have been sustained up until recently, or up until now.
Would you like to see them lifted immediately, as some states are?
No, I don't think. We're splitting hairs. You can make it a little bit quicker, a little bit. No, I don't think that's the big issue. The big issue is the amounts of money that have been produced and put into the system. And that, together with the lesser impact on the economy of COVID as we get past that, is creating a giant stimulation that is having inflationary impact. So you're going to see a big increase in the inflation rate, and that'll become an issue. And it will be difficult increasingly to sell those bonds and require more printing of the Fed. Those are the big issues.
This is not the first time Ray Dalio has come out and warned about inflation. He has been warning about higher inflation for months now, in nearly every interview he has given to the media. I'm excited to tell you about what exactly Dalio is doing in his own investment portfolio to prepare for inflation. But before we go any farther, there are two questions that we need to address to help put Ray Dalio's comments into context. First, what is inflation? And second, why is it considered by many to be so bad? Let's start with the first question. I think it's important to take a minute and define what inflation truly is. It is a term that has been getting thrown around a lot lately, and it is a term that many people likely don't understand. To put it in simple terms, inflation is the sustained upward movement in the overall price level of goods and services in the economy. Or, even in a more simple way, things just get a lot more expensive. It has the effect of devaluing a particular currency. When a unit of currency depreciates in value, so does purchasing power, as it takes more currency units to buy the same amount of goods and services than it did in the past. In other words, your money buys you less stuff, be it groceries, rent, or medical services. Inflation affects individuals and the economy. When inflation rises faster than wages increase, it causes a decrease in purchasing power that forces individuals to fork over more dollars, euros, or other form of currency to buy necessities, ranging from food and clothing to medical services, which can put the average consumer in a bad place financially and reduce discretionary spending. This can be especially bad for the elderly and the retired, many of whom lived on a fixed income. This means the money they receive every week from their pension or Social Security remains the same while the cost of everything, i.e. groceries, transportation, utilities, continues to increase, making it more difficult to pay for basic necessities. Inflation can also hurt savers, as inflation diminishes the value of the interest you earn on your deposits. Periods of time with very high inflation, also called hyperinflationary environments, can have impacts beyond the economy and investing. Just look to the 1970s in the United States as an example. Many historians and economists credit the social and political impact of double-digit percentage inflation during the decade leading to the landslide election win of Ronald Reagan in 1980. Reagan won 489 electoral votes compared to Jimmy Carter's 49. Now that we have context around Dalio's comments, let's examine his portfolio to get a better sense of what he is doing to prepare for what's ahead. Ray Dalio strongly believes inflation is coming, and he is putting his money where his mouth is by building an investment portfolio that is likely to be much more resilient to the impacts of inflation than a standard portfolio of 60% stocks and 40% bonds. Let's take a look at some of the individual positions Dalio has within his portfolio. The two largest positions in Dalio's portfolios are ETFs. But if we look past those to his individual stock holdings, it is clear that Dalio has constructed his portfolio in a way to protect against the impacts of inflation. First up is gold. Gold is the third largest position in his portfolio, and at nearly 5% of his total portfolio, Dalio has more exposure to gold than any individual company. Anyone who has been a Dalio follower for a while will not be surprised by this investment. Dalio likes gold. One of his famous quotes is, "If you don't own gold, you know neither history nor economics." This investment is a textbook and traditional hedge against inflation and economic uncertainty. The logic behind the investment is clear. To put it simply, as inflation raises prices in the economy, it will also increase the value of gold, thus producing a positive investment return. In addition to ETFs and gold, Dalio owns a collection of individual stocks. Three of his largest positions really stand out to me that prove he is positioning his portfolio for inflation. Walmart, or WMT on the New York Stock Exchange, is Dalio's biggest position in a single stock. This makes up 3.8% of his portfolio, valued at $443 million. As we all know, Walmart is a chain of discount big box stores, scattered throughout America, Canada, Mexico, and a couple other countries. Walmart is the largest company in the world, based on total revenue of $550 billion. The company sells discount goods, many of which are basic necessities people need, like groceries, personal care items, and clothing. Walmart will likely not be devastated in an inflationary environment, as the company will likely be able to pass on any price increases to customers who still need to buy the products Walmart sells. At $435 million, consumer packaged goods company Procter & Gamble, or P&G as is commonly referred to, makes up the next largest position in his portfolio. P&G sells products for everyday use, with well-known brands such as Gillette, Tide, and Charmin, just to name a few. Remember how earlier we talked about how one of the negative impacts of inflation is that it leaves less money for discretionary, or to put it another way, non-essential spending? P&G makes products that are considered non-discretionary spending, meaning they have to be purchased regardless of economic conditions. During times of high inflation, people may take less vacations and buy less new cars, but they will still need to buy the dish soap, laundry detergent, and personal care items that Procter & Gamble sells. Comprising nearly $300 million, Coca-Cola is another large position in Dalio's portfolio. Let's take a page out of another prominent investor and Coca-Cola shareholder when we think about why Coca-Cola would do well with high inflation. In case you didn't know, that investor is none other than the legend himself, Warren Buffett. Buffett says that one of the best ways for a company to beat inflation is to have a strong moat, or to put it another way, a strong competitive advantage. With its strong global brand and loyal customer base, Coca-Cola is the perfect example of a company with a moat. If Coca-Cola has to raise the price of a 2-liter bottle of Diet Coke by 25%, for example, people still gladly purchase the product because they like it much better than the competitors. Additionally, the overall cost of Coca-Cola products is such a small percentage of a person's overall spending that they will gladly splurge on Coca-Cola instead of a generic brand of soda. While it is great to learn about what Ray Dalio is doing in his portfolio, what can the average person, who doesn't run one of the world's largest hedge funds, do to fight the impacts of inflation? Likely one of the simplest and most effective methods for an individual to limit the impact of inflation is to own real estate, either through their primary residence, investment properties, or even real estate investment trusts, commonly referred to as REITs. Listen to this clip of Warren Buffett talk about what he would recommend someone who is worried about inflation do.
Yeah, well, the best businesses during inflation are usually the best. They're the businesses that you buy once, and then you don't have to keep making capital investments subsequently. So you do not face the problem of continuous reinvestment involving greater and greater dollars because of inflation. That's one reason real estate in general is good during inflation. If you built your own house 55 years ago like Charlie did, or bought one 55 years ago like I did, it's a one-time outlay. Whereas if you get an inflationary expansion in replacement capital without having to replace yourself.
Now, I understand that not everyone watching this video has the financial means to purchase real estate directly, or may live in a city where the cost of a house is upwards of $1 million. If that is the case, a REIT would be a great way to get exposure to real estate without tens or even hundreds of thousands of dollars of upfront costs. For example, the REIT, American Homes for Rent, can be bought for less than $40 per share and gives you access to ownership of single-family rentals throughout the United States. Based on what Dalio is saying, it seems likely that we will be entering a period of high inflation. While this may cause panic for the average investor, Ray Dalio hedges his portfolio by investing in inflation-proof businesses and gold. Thank you for watching. I hope you found this information interesting and useful. Talk to you soon.